Hey everyone, welcome back to TalkTickers.
You know it.
Today we're diving deep into Winnebago Industries.
Yeah.
Their Q4 and full year report for fiscal year 2024.
Straight from the earnings call.
This morning, October 23rd.
We're going beyond just the numbers.
Oh, yeah.
We've got the transcripts and market data. Really going to break it down and what it means for you.
Cool.
Think of this as your guide.
Yeah.
Not just what Winnebago did, but where they might be headed.
Right. Exactly.
It's been a bit of a roller coaster for the RV and marine industries this past year.
It has.
Hasn't it?
Yeah, for sure.
So we're really going to dig into how Winnebago is navigating these choppy waters.
All right.
And what they're saying about the future.
Yeah, exactly. It's been a wild ride, that's for sure.
Absolutely.
So let's unpack this.
The first thing that jumped out at me is Winnebago acknowledging the tough market conditions, but projecting a gradual improvement over the next 12 to 15 months.
Interesting. That lines up with what some analysts are saying, right?
Exactly.
That pent-up demand is out there.
Yeah.
Just waiting for the right moment.
Exactly. They're thinking that as interest rates start to ease and that inventory glut starts to clear, we could see a more significant upswing in demand by spring 2025.
Okay, yeah.
But they're not just sitting around waiting for things to get better.
All right, so tell me, what are they doing to get ahead of the curve?
They've made some pretty big leadership changes, especially in their motorhome and towables divisions.
Okay.
It seems like they're really trying to sharpen their focus.
Right.
For example, they've brought in Chris West to head up the motorhome division.
Wait, Chris West?
Yeah.
The guy who just absolutely crushed it with the Barletta boat brand.
The very same.
Yeah.
They're clearly banking on his success translating to the motorhome side of the business.
Okay.
And then over in towables, they've got Don Clark expanding his role.
Don Clark, the mastermind behind Grand Design's incredible success. I'm starting to see a pattern here.
Right.
Bringing in the big guns.
It seems like they're really trying to leverage their internal talent.
Yeah.
Placing people with proven track records in areas that need a boost.
Okay.
Don Clark is now overseeing all towables, including the Winnebago brand.
So they're really hoping he can sprinkle some of that Grand Design magic over there.
Right.
That is a fascinating move.
Yeah.
It really seems to show how serious they are about maximizing the potential of each brand within their portfolio.
Definitely.
But speaking of Grand Design,
oh, yeah,
we have to talk about the big news.
Oh, absolutely.
The Lineage.
This was a major reveal, and everyone's buzzing about it.
Yeah, I saw some pictures online.
Yeah.
That thing is a real head turner.
It was definitely a star attraction at those recent industry shows.
Okay.
And get this. They actually started shipping early units in Q4.
Wow. So it's not just hype. It's already hitting the road.
Exactly.
That's pretty cool.
The big question now is whether it can live up to the Grand Design name.
Right.
Really shake things up in that Class C segment.
All right. So lots of strategic moves, a shiny new product.
Right.
Let's look under the hood and see what the numbers are telling us.
Okay.
Starting with Q4 revenue.
Okay, so revenue was down for the quarter.
Yeah.
No big surprise there, given the state of the market.
Right.
But there are definitely some bright spots.
Okay.
Winnebago highlighted those initial Lineage shipments, which is encouraging.
Yeah.
And then Barletta continued to gain market share in the pontoon market.
Okay.
Chris Craft also saw some recent retail growth.
So even with an overall dip, they're showing some real strength in specific areas.
Yeah.
But I imagine profitability took a hit, right?
Yeah, a few factors at play there.
Okay.
Warranty expenses are up.
Okay.
That seems to be connected to some operational issues in the Winnebago Towables division.
All right.
Remember the one they've brought Don Clark in to fix?
Right.
They're also dealing with some increased costs from investments in new areas, like that whole Grand Design motorhome venture.
Yeah.
Launching something like that doesn't come cheap.
No, it doesn't.
Especially with all the supply chain stuff going on.
Right. Those startup costs can really add up.
Yeah.
But that makes sense if they're playing the long game here, investing now for future growth.
Right.
Speaking of the long game,
yeah,
did they give any indication of what they expect for the full year?
For the first time ever.
Oh, wow.
They're actually providing annual guidance.
Really? That's a big step.
It is.
They must be feeling at least somewhat confident.
They are projecting modest revenue improvement for fiscal year 2025.
Okay.
And here's the kicker,
Right.
a 10% increase in adjusted EPS.
Okay, that's definitely a sign of cautious optimism.
Yeah.
It suggests they see a path to growth, even with all the current market challenges.
Right.
So let's break down that guidance a bit more.
Sounds good to me.
And see what factors might influence their performance throughout the year.
Let's dive in.
One thing that stands out to me is their decision to stop providing backlog information, starting with their Q1 2025 results.
It's an interesting move.
Yeah, it is. Why are they doing that?
They're basically saying that backlog just isn't as reliable a predictor of future performance as it used to be.
Okay.
Especially given the current market volatility. So they're shifting their focus to other metrics that they feel will give a clearer picture of where things are headed.
Makes sense. They're adapting to the changing landscape and trying to be as transparent as possible with investors. It's also worth noting that even with this roller coaster year, Winnebago's balance sheet remains solid.
Absolutely.
Okay.
They've generated healthy free cash flow throughout the year and have actually continued their impressive streak of dividend increases.
Wait, how long has that streak been going now?
6 years?
6 years.
That's a pretty clear signal that they're committed to rewarding their shareholders.
Yeah, that is.
And they're not just talking the talk. They backed it up by buying back $70 million worth of shares in fiscal year 2024.
Wow. That's a bold move in this kind of environment.
It is.
Putting their money where their mouth is, indeed.
Yeah.
It seems like they're taking a really balanced approach, investing in growth, rewarding shareholders, and maintaining a solid financial foundation. I can't help but think that's a pretty good recipe for success in the long run.
I agree. But to really understand what this all means, we need to zoom in on some of their key brands.
Okay.
See how they're performing within the RV and marine segments.
No, you got it. Let's break it down brand by brand.
All right.
What's driving their results.
Yeah.
Starting with towables.
Okay. All right. So Winnebago has two main players in the towables game.
Right.
Grand Design, their star performer.
Yeah.
And the Winnebago branded towables.
Okay.
Which haven't been doing as well lately.
Yeah, that's what I was thinking.
Yeah.
I know Grand Design has really built a reputation for quality and innovation. They seem to be holding strong even in this softer market.
They are. How so? Their Q4 revenue actually increased year over year.
Really?
Largely due to higher unit volume.
That's impressive.
Yeah.
But they did see a slight dip in average selling price per unit, right?
They did.
Okay.
But what's interesting here is that the lower price isn't necessarily a bad thing.
Okay.
Mainly due to a shift in their product mix.
Okay.
They've been strategically expanding into more affordable segments.
Right.
Really smart in this kind of economy.
Yeah.
They're attracting buyers who might be more budget conscious right now.
Makes sense.
And they're doing it without sacrificing their commitment to quality.
How can you tell they haven't sacrificed quality?
Their warranty costs as a percentage of net revenue are still below pre-2023 levels.
Okay, so they're managing costs, well, even as they adjust their strategy to meet the current market demand. That's great to hear. It sounds like they're really in tune with what consumers are looking for right now. But what about the Winnebago branded towables?
Yeah.
We know they haven't been performing as well.
Unfortunately, yeah, they faced some headwinds this quarter.
Okay.
They saw a revenue decline.
Okay.
Due to a drop in both unit volume and average selling price per unit.
Ouch. Didn't they mention some operational challenges too?
They did.
Yeah.
They've been trying to streamline their production process, consolidating everything under one roof.
Right.
But it seems to have backfired a bit.
Oh, no.
Led to some inefficiencies and even some inventory write-downs.
That's not good.
No.
And I think they also mentioned higher warranty expenses.
They did.
Which suggests some quality issues might be cropping up. So it sounds like there's a lot of room for improvement in that division.
There is.
Okay.
This is exactly where they're hoping Don Clark's leadership will make a difference.
Right.
They're really hoping he can bring some of that Grand Design magic over to the Winnebago side.
Yeah.
Turn things around.
Well, I guess we'll have to see how that plays out. It's certainly a big challenge, but Don Clark has a pretty impressive track record.
Absolutely. Okay, let's shift gears now.
Okay.
Talk about motorhomes.
Right.
Winnebago has a pretty diverse lineup here.
They do.
Their own Winnebago brand, the luxury Newmar line, and of course that brand new Grand Design Lineage.
Right.
It's a powerful portfolio.
Yeah, it is.
Each brand is aimed at a different segment of the market, which gives them a broad reach.
Yeah, that's a smart strategy, especially when the market is as unpredictable as it is now.
Absolutely.
So let's start with the Winnebago brand.
Okay.
What's the story there?
Well, they faced some challenges in Q4.
Okay.
Revenue was down year over year.
Okay.
Due to declining unit volume and some shifts in their product mix.
What kind of shifts in product mix are we talking about?
It seems like they might be struggling to compete in the entry-level segment.
Okay.
Facing those same high warranty expenses we saw in towables.
Right.
Sounds like they're having some supply chain headaches as well. Oh. On top of that, they've had to increase promotional activity to stay competitive.
Yeah.
Which obviously puts a squeeze on their margins.
Yeah, it sounds like they're caught in a bit of a price war.
Yeah.
It's a tough environment out there, especially in that more price-sensitive end of the market.
Exactly. But despite all those headwinds, they're not giving up. Remember Chris West, their new president?
Of course, the Barletta superstar.
Right. He's got a solid track record.
Yeah.
They're confident he can help stabilize performance.
All right.
Maybe even regain some market share.
Well, I hope so.
Yeah.
What about Newmar? They've been the luxury darling of the Winnebago portfolio for a while now.
They have.
Haven't they?
Yeah.
How are they doing?
Seems like nothing can stop them. Their Q4 right now is actually up year over year.
Really up?
Yeah.
That's amazing in this market.
Yeah.
How are they doing it?
They're managing to pull it off with a combination of higher unit volume.
Okay.
And strategic pricing that really reflects the premium nature of their product.
So they're not shying away from pricing their products appropriately.
Not at all.
For the luxury market.
They're also keeping a tight rein on costs.
Okay.
Reflected in their impressive EBITDA margin.
Okay. For those of us who aren't financial whizzes.
Sure.
What exactly is EBITDA margin?
It's basically a measure of a company's profitability that takes into account earnings before interest, taxes, depreciation, and amortization.
Okay.
Gives you a clearer picture of their operating profitability, stripping away some of those accounting complexities.
Got it. So a higher EBITDA margin means they're keeping more of their revenue after covering those operating costs.
Exactly.
That's good, right?
Very good shows. They're running a tight ship managing their expenses well.
Okay.
Newmar's success is a testament to the fact that there's a strong and growing demand for high-end RVs, even when the economy is a little shaky.
Yeah. So it's like a whole different market segment.
It is.
Driven by different factors.
Right.
Okay, that makes sense. So we've got Winnebago battling it out in that more competitive segment. Newmar cruising along in the luxury lane.
Yeah.
And then, of course, we've got the new kid on the block, Grand Design's Lineage series, M.
Right. It's still early days, so it's too soon to talk numbers.
Yeah.
But the early response has been overwhelmingly positive.
I've been hearing a lot of buzz about it online. People seem to be really excited about it.
Yeah.
What do you think the key to their success will be?
Well, Grand Design has a real knack for understanding what customers want.
Okay.
They're known for their innovative designs, their attention to detail, and their commitment to quality.
Yeah.
They seem to really get what makes a great RV, and they're bringing that same energy to the motorhome segment.
Plus, the whole Grand Design brand carries a lot of weight in the industry.
Yeah, it does.
People trust them, and they know they're going to get a quality product. It seems like a winning combination to me.
I agree. They're definitely making a bold move, launching a new product line in this kind of market.
Yeah.
But it could really pay off if they can capture even a small slice of that Class C segment. Winnebago is actually projecting over $100 million in sales for the Lineage in fiscal year 2025.
Wow. That's ambitious.
It is. But Grand Design has a history of exceeding expectations.
True.
So it wouldn't surprise me at all if they hit that target. They really seem to have their finger on the pulse of the market.
Yeah. They do. All right. Well, we'll be watching closely to see how it all unfolds.
We will.
But we can't forget about Winnebago's other big bet.
Right.
Their marine division.
Yeah.
They're really trying to make waves.
Literally.
Literally. With their Barletta and Chris Craft brands.
Right.
What's going on there?
These brands are all about diversification.
Okay.
They represent Winnebago's commitment to building a business that's not solely reliant on the RV market.
Okay.
So far, it seems to be paying off.
Yeah.
They've had some impressive wins, even with the broader marine industry slowdown we've been seeing.
Yeah, Barletta, their pontoon boat brand, has been a real standout.
They've been crushing it.
Yeah, they have. How so?
They've consistently gained market share, reaching a remarkable 9.1% in the trailing 12 months through August 2024.
That's amazing.
That's no small feat in a competitive market.
It's like they've found a magic formula for success in the pontoon world.
They have.
What do you think is driving those results?
Their focus on premium pontoons seems to be a real winner.
Okay.
Dealers love them, consumers love them, and they're outperforming their competitors in a tough market.
Yeah.
They've really carved out a nice niche for themselves.
It seems like it. What about Chris Craft, their luxury boat brand?
Yeah.
They haven't been doing quite as well, have they?
They did face some headwinds in Q4.
Okay.
Revenue decline. But it's not all doom and gloom.
Okay, good.
Some positive signs emerging on the retail front.
Like what?
They've actually had 5 consecutive months of year-over-year retail growth, which suggests they're starting to turn the corner.
So they're weathering the storm, positioning themselves for a potential rebound?
Exactly. And despite that impairment charge we talked about earlier, Winnebago remains committed to Chris Craft.
Okay.
Their long-term potential.
Right.
They're viewing this as a temporary setback.
Okay, that makes sense.
Mm-hmm.
They're not panicking and making rash decisions.
Right.
They're taking a long-term view.
They're seeing this as a cyclical trough impairment.
Okay.
Which means they believe the brand's value will bounce back as the marine market recovers.
That's a good sign they're not just throwing in the towel at the first sign of trouble.
Right.
They're sticking with their strategy.
Mm-hmm.
So we've covered a lot of ground here.
We have.
We've looked at their strategic moves, their financials, their brand performance.
Yeah.
It's clear they're facing some serious challenges, but they're also taking steps to address them head on.
They're not just sitting back and hoping for the best.
No, they're not.
They're actively managing their inventory, trying to stay competitive on price, investing in new technologies to enhance the customer experience.
Yeah, we didn't really get a chance to delve into that technology piece yet.
We didn't.
Do you tell me more about that?
Sure. They've been focusing on things like advanced manufacturing techniques, digital tools that can make the buying and ownership experience smoother, more enjoyable for customers. For example, they've really enhanced their online presence, making it easier for customers to research and compare products from the comfort of their own homes.
That's so important these days. Everyone's shopping online now.
Yeah.
You have to have a strong online presence if you want to stay competitive.
Absolutely. And they've also been developing digital platforms can streamline the service and warranty process, making it less of a hassle for owners. All about reducing friction points, making it easier for customers to do business with them.
That makes a lot of sense. It sounds like they're really trying to stay ahead of the curve in terms of technology and innovation.
They are. And it's important to remember that they have a very experienced and capable leadership team guiding them through all of this.
Yeah.
We've talked about the recent changes in the motorhome and towables division.
But it's worth emphasizing that the broader team has a deep bench of talent with a proven track record in the RV and marine industries.
Yeah, these folks have seen it all.
They have.
They've navigated economic cycles before they understand the intricacies of these markets. They know how to execute successful strategies.
Right.
And importantly, they're not afraid to make bold moves.
Yeah.
As we've seen with the launch of the Lineage in this uncertain market.
Right.
So that's encouraging.
Exactly. They have that long-term vision and the willingness to take calculated risks, which are essential qualities in a leader.
Yeah.
Especially in this environment.
Totally agree.
So let's take a step back for a moment.
Okay.
Recap the key takeaways from this part of our analysis.
Okay.
We've covered a lot of ground.
We have.
Always helpful to synthesize this information before we move on.
Yeah, I agree. A quick recap would be great.
All right, so here's the big picture.
Okay.
Winnebago, like the entire RV and marine industry, is facing some serious challenges right now.
Demand is down. Competition is fierce.
Yeah.
Economic uncertainty is making everyone a bit cautious.
Yeah, it's a tough environment out there.
It is. But despite these challenges, Winnebago is showing some real resilience. They have a solid balance sheet. They're generating healthy cash flow. They're continuing to invest in their future.
Yeah.
And they're not just sitting back and waiting for the market to turn around.
No.
They're making strategic moves, like those key leadership changes.
Right.
Launch of the Lineage to position themselves for growth.
Right. They're also being proactive about managing their inventory, staying competitive on price.
Yeah.
Embracing new technologies to enhance the customer experience.
Right.
All those actions point to a company that's determined to not only weather the storm, but to come out stronger on the other side.
Absolutely. They're playing the long game.
Yeah.
Their strategy seems to be sound.
Okay.
But let's not get ahead of ourselves.
Right.
There's still a lot of work to be done, and the coming year will be crucial in determining whether they can achieve their goals.
Right.
We need to see how those leadership changes impact performance, how the Lineage performs in the market, and how Winnebago as a whole adjusts to the ever-changing dynamics of the RV and marine industries.
You got it. So stay with us as we move into the final part of our Winnebago Deep Dive.
Right.
We'll be exploring the factors that could make or break their success in the coming year, the potential risks and opportunities they face, and of course, what it all means for you, the investor.
Right.
All right. So we've covered Winnebago's performance, their strategic moves, and even dove into their individual brands.
We have.
Now let's put on our analyst hats and talk about what's next for Winnebago.
Okay.
What are those make or break factors for their success in the coming year?
That's the million-dollar question, isn't it?
It is.
I think the biggest factor, the one that hangs over everything else, is the overall health of the RV and marine markets.
That makes sense.
Yeah.
Winnebago could be doing everything right internally, but if people just aren't buying RVs and boats, it's going to be an uphill battle.
Exactly.
Yeah.
They're projecting that gradual market improvement we talked about, but that's not a guarantee.
Right.
There are a lot of things that could influence consumer demand.
Like what?
Like interest rates, inflation, even just general consumer confidence.
Right. If those things don't improve, or if they take a turn for the worse, it could really derail their plans, especially since they're banking on a more significant upswing in spring 2025.
Right. If that doesn't materialize, it could impact their ability to hit those sales targets and really capitalize on the investments they're making.
So market conditions are definitely something to watch closely. But beyond that, what else should we be paying attention to?
Execution, plain and simple.
Okay.
They've got those new leaders in place, a brand new product line hitting the market. They have to execute flawlessly to make all of this work.
So it's not just about having a good plan on paper. It's about being able to actually implement it effectively.
Exactly. Chris West needs to turn things around in that Winnebago motorhome division.
Yeah.
Don Clark has to work his magic on the Winnebago towables. And of course, that Grand Design Lineage needs to live up to all the hype.
Right.
There are a lot of moving pieces, and each one needs to click into place for them to really thrive.
It's a high-stakes game, for sure. And they're not playing it alone, are they? There's that whole competition thing to worry about,
Oh,
too.
yeah. Let's not forget about the competition.
Right.
The RV and marine industries are full of really strong players.
Yeah.
Winnebago can't afford to rest on their laurels, especially in a market like this.
So they need to stay innovative, keep pushing the boundaries, find ways to stand out from the crowd.
Absolutely. If they want to stay ahead of the pack, they have to keep offering that compelling value proposition that keeps customers coming back for more.
Okay, so we've talked about what needs to go right for them to succeed. Now let's flip the script and talk about risks.
Okay.
What are some of the biggest risks facing Winnebago right now?
Well, I think the biggest risk, and it's one we've touched on already, is that the market recovery simply takes longer than they're expecting.
Okay.
What if that consumer spending stays sluggish?
Yeah.
Interest rates remain high, and those inventory levels take even longer to rebalance.
That's a scary thought. I mean, they're projecting improvement, but what if it just doesn't happen as quickly as they're hoping?
That's the risk.
Yeah.
It would put a lot of pressure on their margins, their sales targets, and potentially even their ability to keep investing in future growth.
Right.
They've got to walk a fine line between managing costs and continuing to innovate.
Right. You can't cut costs so much that you stifle your ability to grow and adapt to the market. It's a delicate balancing act, for sure. What else is keeping you up at night when it comes to Winnebago?
Supply chain disruptions.
Oh.
Those are always a concern, especially in today's world. We've all seen how fragile global supply chains can be and how easily they can be disrupted by things that are completely outside of a company's control.
Yeah, we've seen it with pandemics, with geopolitical tensions, even just with extreme weather events. It can all have a ripple effect.
Exactly. And those disruptions can hit the RV and marine industries particularly hard.
Yeah.
They rely on a complex web of suppliers and manufacturers, and any disruption in that chain can lead to production delays, increased costs, and ultimately unhappy customers.
So how can Winnebago mitigate that risk?
They need to be proactive, they need to diversify their supplier base, build strong relationships with their partners, and always have contingency plans in place.
Okay.
They need to be prepared for the unexpected, because the unexpected is becoming increasingly common these days.
That's great advice for any business, really. But when we're specifically talking about Winnebago and what investors should be watching for, there's another risk we need to consider, right? Changing consumer preferences.
Oh, absolutely. We can't forget about that one.
No.
The RV and marine industries are constantly evolving.
Yeah.
What's hot today might be old news tomorrow.
Right.
Winnebago has to stay ahead of those trends.
So they need to be anticipating what customers will want next and adapting their product offerings accordingly.
Right.
If they're not careful, they could find themselves falling behind the curve.
Exactly. They need to be the trendsetters, not the followers.
Right.
And they need to be constantly innovating and experimenting to stay ahead of the competition.
Well, that brings us to the flip side of risk, doesn't it? Opportunity.
Yes.
What are some of the biggest opportunities you see for Winnebago right now?
There are some big ones, for sure.
Yeah.
And I think the most exciting, the one with the most potential for long-term growth, is the electric vehicle space. I mean, it's no secret that EVs are becoming increasingly popular, and that trend is only going to accelerate in the coming years.
And it makes sense, right? People are looking for more sustainable options, and the technology is getting better and more affordable all the time.
Exactly. And Winnebago's already making moves in this space.
Right.
They've dipped their toes in the water with their electric RV concept, the ERV2.
Okay.
And they've acquired Lithionics battery, which gives them some serious expertise in battery technology.
Wait, Lithionics battery, that's a pretty big deal, isn't it?
It is.
They're like the leading supplier of lithium batteries for RVs.
They are, and that acquisition was a really smart move by Winnebago.
Yeah.
It gives them a huge advantage in the electric RV market. They're positioning themselves to be a leader in this space, and that could pay off big time in the years to come.
It's a bold bet, but it's the kind of bet that could really transform their business if it pays off.
Absolutely. And speaking of bold bets, another big opportunity for Winnebago is international expansion.
Okay.
Right now, they're mostly focused on the North American market, but there's a whole world out there.
Yeah, they're leaving a lot of potential growth on the table by staying within North America.
They are. Think about the growing middle class in Asia.
Yeah.
The adventure tourism boom in Europe.
Yeah.
There's a huge untapped market for RVs and boats in those regions.
So Winnebago could take their strong brands, their manufacturing expertise, and their innovative products and really start to make a name for themselves on a global scale.
Exactly. It would be a big undertaking for sure, but the rewards could be enormous.
Yeah.
It's definitely an opportunity worth exploring.
Okay, so we've got EVs, we've got international expansion. What else? What other opportunities are out there for them?
Strategic acquisitions. Winnebago has a history of making smart acquisitions that have really enhanced their portfolio and expanded their reach.
Yeah, you only have to look at their track record with Grand Design, Newmar, Barletta, and Chris Craft.
Right.
Those acquisitions have all been really successful for them.
They have, and it seems like they're always on the lookout for new opportunities.
Yeah.
They're constantly evaluating potential targets, looking for companies that complement their existing businesses or open up new markets for them.
Okay.
It's a smart way to grow and adapt to a changing market.
Okay, so we've talked about the make or break factors, the risks, the opportunities. Now for the big question, the one that's on every investor's mind. What does it all mean?
Right.
How do we take all this information and figure out if Winnebago is a good investment or not?
That's the art and science of investing, isn't it?
It is.
There's no easy answer.
Yeah.
The first thing you need to do is really understand your own investment goals and risk tolerance.
That's a great point. Every investor is different.
They are.
Some people are looking for quick returns. Some are in it for the long haul. Some are comfortable with a lot of risk. Others prefer a more conservative approach.
Exactly. So before you even start looking at a company like Winnebago, you need to have a clear understanding of what you're trying to achieve with your investments and how much risk you're willing to take on. Once you've got that figured out, then you can start to evaluate Winnebago's financials, their strategy, their management team, and their overall prospects.
So we're talking about looking at their revenue growth, their profitability, their debt levels, their cash flow, all those nitty-gritty financial details.
Right. You want to make sure the company is financially healthy and that they're on a solid footing. But it's not just about the numbers. You also want to consider their strategic moves. Are they making the right decisions to position themselves for success in the future?
So are they adapting to the changing market? Are they innovating? Are they making smart acquisitions? Those are all things investors need to be thinking about.
Exactly. And you also want to look at their leadership team. Do they have the experience, the vision, and the track record to navigate these challenging times and come out on top?
It's about assessing whether you believe in the company's leadership and their ability to execute their strategy.
Right. And of course, you can't forget about those risks and opportunities we discussed. How is Winnebago mitigating those risks? Are they taking steps to capitalize on those opportunities? It's a lot to weigh, but by carefully considering all of these factors, you can start to form an informed opinion about whether Winnebago is a good fit for your portfolio or not.
And it's important to remember that there's no one-size-fits-all answer. What's a great investment for one person might be a terrible investment for another.
That's why it's so important to do your research, understand the company and the industry, and maybe even talk to a financial advisor before making any decisions.
Great advice. Now, before we wrap up, there's one last thing we need to emphasize, especially for new investors who might not be as familiar with these industries.
Okay.
Winnebago operates in a cyclical market. What does that mean for someone thinking about investing in their stock?
That's a really important point.
It is.
A cyclical industry means that Winnebago's performance is heavily influenced by the broader economic cycle. When the economy is booming, people have more disposable income, they're more likely to buy RVs and boats, and Winnebago's profits tend to soar.
But when the economy slows down, Or when we head into a recession, people tighten their belts, they put off those big discretionary purchases, and Winnebago's profits can take a hit.
Exactly. So as an investor, you need to be prepared for those ups and downs.
Right.
Don't panic if the stock price drops during an economic downturn. That's just the nature of a cyclical business.
And on the flip side, don't get too carried away when the stock is doing well. Those good times might not last forever.
It's all about understanding the cyclical nature of the business and managing your expectations accordingly.
All right, so as we wrap up this earnings deep dive, what's the final takeaway for our listeners? What should they be thinking about as they consider Winnebago as a potential investment?
Here's the bottom line. Winnebago is a company at a crossroads. They're a well-established leader in their industry, but they're also facing some very real challenges. The market is tough. Competition is fierce, and consumer preferences are changing faster than ever. They can't just keep doing things the way they've always done them. They need to evolve, they need to adapt, and they need to make some tough decisions.
But it seems like they're doing that right.
Oh.
We've seen them making those bold moves, shaking things up with new leadership, new products, a focus on affordability, and investments in technology. It shows they're not afraid to take risks and embrace change.
Exactly. They're not just sitting back and waiting to see what happens. They're actively trying to shape their own destiny. And that makes them a really interesting company to watch.
It does. Will those moves pay off? Will they be able to overcome the challenges and emerge even stronger? Only time will tell.
That's the exciting thing about investing. It's about betting on the future. And with Winnebago, the future is full of possibilities.
So for our listeners out there who are considering Winnebago as an investment, what's the one piece of advice you would give them?
Do your homework. Really understand the company, the industry, the competitive landscape, and the risks and opportunities they're facing. And most importantly, make sure it aligns with your own investment goals and risk tolerance.
Great advice. Thanks for joining us today for this deep dive into Winnebago Industries. We hope you found it informative and insightful. We'll be back soon with another episode of TalkTickers, breaking down another earnings call and helping you make sense of the ever-changing world of investing.
Until then, happy investing, everyone.